Hello and welcome back. I'm Benny Victory. I wanted to make a second in a series of videos that go over the topic of what happens when you and I get together to discuss your reverse mortgage interest and what the process entails. This video follows the one that I made where it gives you kind of an overview, but I wanted to dive down deeper and get into the specifics of what happens in the first meeting, and then if we make it to the second meeting, what happens specifically in the second meeting. I think it's really important to have the actual um, deconstruction and outline and the sequence of the conversation, because if you see and you hear me discuss it, then when we meet, you pretty much know what to expect and will be that much more comfortable with the process, because the whole discussion around getting a reverse mortgage, especially the first time we meet, it's about discovering your problems, your concerns, and your needs. And these three things, problems, concerns, and needs, if you really think about them, are three separate issues. They sound like they're discussing the same problem, but they're not. A problem is different than a need, than is a concern. And in the subsequent videos that I'm going to do, I'm going to break it down a little bit further and go into more specific detail. But for this video, which is encompassing the first time we're going to get together, I wanted to kind of give you a broader scope. So I discussed briefly the idea of collaboration. And I said, when we meet, me as the advisor, you as the client, I'm not the salesperson and you're not the buyer. What does that mean? That means that I'm not selling you something. When you go to a store and you're interested in buying something, there's the pressure that by the time you leave the store, the salesperson is going to sell you something. I'm not here to sell you anything. What I'm here to do is to inform you of the possibility of how this program, which has been in effect for the last 34 years, signed into law through Congress, through President Ronald Reagan in 1988, was designed and intended to help seniors access a portion of their home equity. And if we have a starting point about what your needs are, what your concerns are, what your issues are that you're dealing with, and I, as the advisor, can share with you that there's a product or program that could help you address and alleviate these things, then that's when I'm doing my job. My job is not to give you something that you don't need, because there's not something to give you. And this process, as I mentioned earlier in the other video, is so lengthy. It's at least 2 months long. And there's so many steps to it that there is not an opportunity for me to be able to say, okay, if I get them in and I rush it, they're going to get stuck with something that they don't want, but they won't notice it. The process starts with us talking. If you're interested to go forward, then doing a required credit counseling, having to wait 7 days after the credit counseling. After the credit counseling and taking the application, then there has to be escrow opened, title insurance ordered, appraisal done, your application is going to be reviewed, and a credit decision is going to be made. There's so many steps, and the process is so detailed that there isn't anything for me to be able to force upon you. And I wouldn't want to do that anyway. That's not how I operate, and that's not my interest, and that's not why I'm in this business. So the sooner we understand that, the sooner you're comfortable with that, the sooner you understand that ours is a relationship of collaboration, the sooner I can do what I want to do, which is really determine and see if you are a good candidate and if your problems and concerns are something that this program can help you address. So how do we do that? What does this collaboration mean? Collaboration is a discovery phase. What is this discovery? It's a discovery where we sit down and we have a conversation like two friends. Like if you go to your financial advisor, if you go to your attorney, if you go to your best friend whose financial savviness you trust, and you say, look, these are my concerns. What do you think I should do? Now, if you say to me, look, Benny, I don't know what you're talking about, give me some examples, I will tell you that right off the bat, I wrote, just making this video, at least 10 things that are very common when I sit down with people. And I'll just read a couple of them, and you tell me if any of them resonate with you, and you say, oh my God, you know what? That's something I think about. That's something that worries me. That's something that I'm concerned about, and I don't know how I'm going to deal with it for the next 10, 15, 20 years. So this is not in any particular order, but if I read these and alarm bells ring off, then that's something that we could talk about, and maybe this is something that the program can help you with. So if I said to you, are you feeling comfortable that you have enough savings for your retirement? Do you feel that the money that you have in your bank account right now, in your retirement account, in your 401, is that enough to take care of you and your spouse with all your expenses for as long as you think your retirement's going to last? If not, that's something for us to talk about. If you have investments and your investments have taken a significant loss in the market, and you're concerned that if you go in and take some of that money to help you pay for your living expenses, you lose the opportunity of that money coming back in the stock market, that's something for us to talk about. Are you coming into retirement with a significantly bigger amount of debt than you thought about? Do you have clients that have credit cards in $50,000, $60,000, and the monthly payments, the monthly required minimum payments are as much as $1,500. They have car loans. They have a mortgage that they're going to be potentially paying off for the next 15 to 20 years. And when they look at those significant amount of debts that they're coming in and how little their savings is, they're looking at the fact that it's disproportionate. And they're concerned about how is this little amount of savings that I have going to take care of all this debt that I have. Inflation. In the past 2 years with COVID, we've seen what inflation has done. What it used to cost me to fill up my car, which was $90, is now $120. And I'm now looking at an extra $120 a month of paying for gas. For the same amount of gas that I used to put in my car, it's costing me an extra $120. I don't see that coming back. Once these prices go up, there is no coming back. Outliving your savings. This is called longevity risk. You may be really healthy, thank God, doing good, but then you're thinking, I had just had this client conversation. The client was concerned that at 77, they may not have enough money to last them if they get up to 85, 87, 90 years old. That's the longevity risk. Concerned with long-term care costs. Now that could be either for yourself or for your spouse. If you've seen people around you get sick and need long-term care, and they don't want to go to live in a rehab or some sort of facility, and they want to have an aging in place option and stay at home and have someone come in and help them, and their spouse can't do it because the spouse has health issues or just is not physically able to do it, the cost of care in home could very easily be a couple of $1,000s. Now you might say, okay, Benny, I have long-term care insurance. Fantastic. Long-term care insurance is pretty expensive. And if those costs continue to increase and you don't want to lose your insurance, and in one side you have your mortgage payment every month, and on the other side you have to have long-term care insurance, that cost of paying both of them plus all the other living expenses is going to be substantial. And maybe that's going to dwindle down your savings significantly very quickly. God forbid you lose a spouse, and that spouse that you lose right now is bringing in money, whether it's a pension, whether it's a retirement, whether it's Social Security. And the two of you need this money to be able to make ends meet. And if one spouse passes away, that's going to potentially take away 30 to 50% of your monthly income that you count on and you rely on. Um, in the same vein, not having an emergency cash fund where you have $30,000, $40,000 sitting in it. Now that sounds absurd to have that much money sitting around, but God forbid your spouse passes away and you have to bury them. When my father passed away 4 years ago, we were shocked at how much money we spent in the span of 30 days for his funeral expenses, um, the temple events, everything that needed to be done and had to be finalized was a significant cost. And it's no surprise to me when somebody says it cost $25,000 for us to bury my father or my mom or something of that nature. And if your spouse passed away and you had that kind of an expense overnight, how would you deal with it? If your roof had a problem and you needed to replace it, if you have to change and upgrade or update or remodel your home so that you could have a walk-in bathtub so that you don't slip and fall and you could stay in home, or if you have a two-story home and you need to make a second bedroom downstairs. These are just a sample of things that are problems, needs, and concerns that when we sit down, we will discuss and talk about. And again, it's not facing each other as salesperson and someone who wants to avoid giving me the information, but really as a collaboration so that once I understand what your problems are, then we could say, how can what this program is designed to do help you alleviate some of these concerns? Then we do a discussion around your mortgage. Do you have a mortgage right now in your home? If you do you know what your exact balance is? Do you know how much your monthly payments are? Do you know how many years left on the mortgage? Do you know if you have an adjustable interest rate or a fixed interest rate? Do you have a home equity line of credit? Do you know how much the limit is? Do you know what your balance is? Do you know your interest rate? Do you know the monthly payment? Is your monthly payment interest only or principal and interest? Are you on the first 10-year period of that line of credit where you can only pay interest only and you could use that money? Or are you past that and now you're going to have to make principal and interest payments? Are you using that line of credit to help ends meet at the end of the month where you're short a couple of $100 and you go borrow from that line of credit and think that, okay, I have the line of credit. Now, what if the bank freezes or reduces or closes your line of credit like they did back in 2008, 2009? Is that going to leave you in a situation where now you're going to be stranded financially and you don't have any money? We discuss your mortgage, whether you have a mortgage, whether you have a home equity line. If you don't have a mortgage, if you don't have a home equity line, how long have you stayed in the property? What is the property worth? Let's talk about if we could set up a line of credit, a reverse mortgage line of credit for you. We discuss what the benefits of that. What are the benefits and features of having a reverse mortgage? What does it mean when we pay off your reverse mortgage? Use your reverse mortgage to pay off your existing mortgage. What does it mean if you have a line of credit that's a reverse mortgage line of credit? We discuss all of these things. Now, to some clients, I discuss these problems and they say, I don't have these problems. I'm like, then what's your hesitation? Why don't you want to get a reverse mortgage? What are you concerned about? Oh, Benny, I've heard the myths. Okay, what myth? The bank is going to take over my house. I'm going to lose the house. My kids are not going to get the property. I'm not going to be able to leave an inheritance. Those are real issues because of misinformation or poor information that the client has. And once we go over it and we address their concerns, then they understand that those myths are just that. I mean, I have right here next to me a fact sheet that I usually give to clients to walk away with, and it talks about some of these basic things. The lender will own my home. The borrower is restricted to how to use the loan proceeds. Once the proceeds are received, you pay taxes on them. It goes over this and a lot more issues and questions that clients have that may be the reason for them not taking advantage of the program. Um, then we talk about, once we put all of this stuff together, we see if your concerns and your problems are something that you feel comfortable with discussing in terms of solving with a reverse mortgage. And at that point, if you're interested and you say, this is something I want to pursue and I want to see what the next step looks like, then the next step becomes, I say to you, okay, look, let's meet a second time. And that's the second video that I'm going to do following this one. And what I do is I basically have you walk away, or I'll send you this workbook that I've prepared. And quite honestly, I've never seen anybody else do it because, you know, with an insurance background, with a mortgage background, with a legal background, I have an interest in helping people and bring in kind of a inclusive view that has to do with more than just their mortgage. And what I do is I give you this workbook, and it's titled, Will Your Current Savings Last Your Lifetime? Will your current savings last your lifetime? And it's about 15 pages, and this goes really in depth. And we look at not just your mortgage and whether you have it or not, but we look at your living expenses, your housing expenses, your personal monthly expenses, that of your spouse. We break it down expense by expense in each category so that by the time you get to the bottom of it, you will have an exact number of either how much money you're short or how much money you get to save. If you're short, how long before your savings runs out. It's incredible because it's very eye-opening, regardless of whether you decide to do a reverse mortgage or not, whether you decide to move forward with me or not. It's something that I want to give and leave my clients with, because when they walk away, their problems, as far as I'm concerned, the concern that I have regarding their problems, they don't end. I just haven't been able to make the point either urgent enough for them, or they just see things differently. And, you know, God bless them if that's what they want to do. All I could do is show you what my concerns are, show you the solution, and be like, if this goes forward, here's the consequence. If you don't address it, the long-term possibility of it going against you is this. And that's all I could do. And with this notebook, with this workbook, what I do is that I do my best to have the client at the comfort of their own home sit down with their spouse, with their loved ones, with their financial advisor, whoever it is, to help them. And at the end of this workbook, they should be really either concerned about how things are going to go or pleased and say, okay, I've got nothing to worry about. And whatever that situation is, that's okay. But at least they make a decision. Now, if that decision is they call me back and say, okay, look, we did the workbook and we need to get together again, that's what we discuss in the second meeting, which is the video I'm going to do next. So if you're going to get a series of videos, it'll be the sequence of what happens in our first meeting, the second meeting, the overview of this meetings, and the sequence of the process of getting a reverse mortgage. I appreciate your time and your energy. I appreciate the opportunity to help you. I wish you the best. Look forward to seeing you. Thank you very much, and God bless you.